Nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Welcome back, everyone, to the White Rabbit. Today, we'll just go over a few charts I already showed because, to be honest, not much has changed on the bigger picture. These things take time. Here on the long-term Bitcoin power law chart, we are looking at the rising floor. You can clearly see that the low is rising over time. Right now, that floor sits around 53K and is increasing every day. So far, this area has always been the bottom zone for Bitcoin. Price does not have to touch it exactly. It's more of an area. On a closing basis, we usually see a reaction there. On a wick basis, there have been a few deeper touches, but generally, that's the zone where bottoms form. As it stands now, this is my worst-case scenario based on this chart. The true worst case would be if this metric breaks down for the first time in history. That's something I cannot predict, so I go with the data until proven otherwise. What that means, at least for me, is that this time the low might be getting hit faster. It could even already be in. Because again, it's not a rule that price must touch the floor exactly. It's an area. In previous bear cycles, price usually took time and only near the end of the bear market came down to this level. This time, price already came very close to it relatively early. Since we didn't have a classic parabolic top, maybe we also won't have a classic bottom. At least, that's the idea for now. That could mean price was already in some kind of pricing in mode since last year. If that's true, then it carries weight for me, because right now, many people expect the usual bear market structure: drop, range, and then another leg down to 20K or lower. And to be fair, that's what we had in previous cycles. However, this time the average bear market drawdown is far below the power law floor. In previous cycles, bearish retracement targets aligned with the power law floor. This time they don't. That's a new situation. This leads me to the idea: what if we get a bottom earlier this time? What if last year was already part of the pricing in process? That would mean that near the end of the year, when everyone expects lower lows, we might not actually see much lower prices because the power law floor keeps rising. Of course, we can still see a local lower low. For example, price could form a low here, bounce slightly, and then SFP that low. That's completely possible, but the longer time passes, the higher the floor rises. At some point, it becomes more likely that we form a higher low rather than the big lower low everyone expects. I'm not saying the move down is over. There is still some room lower, but for now, we see a pause. Unless price breaks lower from here, we are looking at least some kind of range. The main idea should be clear. Based on this chart, we are closer to a bottom than many people think. Not many are looking at these metrics. Many are drawing their own lines and targeting 20K or lower. I understand those targets, but historically, bearish retracements aligned with the power law floor. This time, they don't. So either this metric breaks for the first time ever, which would be something new, or it holds and we grind up from this area as the worst-case scenario. It can, of course, do whatever it wants. That's not the main point. The main point is that if we don't see a new major lower low, that would surprise a lot of people, and we would have something new again. This cycle already didn't give us a classic top, so I wouldn't be surprised if it also doesn't give us a classic bottom. With that said, let's switch to the next chart. Here I was looking at the 202-day cycle. As a disclaimer, I did not discover this cycle myself. I took it from a video. They use some kind of program for cycle baskets, and it may change over time. I don't have the updated version, but I marked out all the past tops and bottoms based on it. And honestly, the performance hasn't been bad, at least in this cycle. Yes, there are deviations, but that's normal. We know it's a time area, not an exact date. Right now, the next time window is basically active. The midpoint, or what would be the ideal low date, is around March 2nd. At the same time, price is currently sitting on a higher time frame support area. Not only within this channel, but also with other levels aligning in this zone. That's one of the reasons I'm looking for some long trades here. There are more reasons, like certain indicators flashing buy signals, but I showed those in another video, so we'll come back to that next week. For now, this is a good area for some spot buying. I bought small amounts on the way down, and my rabbit box trades are still active. If price comes lower, I'll look to add more spot, especially if my tools or metrics start giving stronger signals. The idea is not to catch the exact bottom, but to buy around it. Then, once confirmation of a reversal happens, I would add more. So the plan is, buy some around the low, possibly buy lower if it drops further. Add more on confirmation of the reversal. That way, I'm building an average around the bottom rather than trying to nail it perfectly. I wanted to do something similar with selling the top, but as I said before, this time we didn't get the classic setup. That still leads me to think that this cycle might not behave like the previous ones. Not on the top, and maybe not on the bottom either. Of course, this is not financial advice, but historically, this area has been a good buy zone if risk is managed properly. The next chart shows the local cycles. We had a weekly cycle low that failed and a daily cycle that is already overdue to print. For now, it's showing a signal, but only as a low probability low. However, we are starting to see some early momentum building, which could be an early sign. All of this is happening inside the 202-day dominant cycle window. That could also explain why the weekly cycle failed. I mentioned before that sometimes other cycles dominate, and when that happens, the lower timeframe cycles just keep grinding up or down until the dominant cycle reaches its target. That's why I remembered the dominant basket cycle video and added it to the chart. And honestly, it makes sense in this context. What we would like to see now is a low forming here, or at least a range without breaking significantly lower. From there, we need to observe what price does next. Will we see a rise that follows this dominant cycle? Or will we get sideways action until the next larger cycle low comes in, around the end of the year, which could potentially be higher than people expect if the power law floor continues to hold? That's the higher timeframe view for now. Of course, this can take time to play out. That's why in the meantime, we focus on the local timeframes and levels and trade them if there are valid setups. Locally, we're looking at this price action here, and I'm trading the idea of a potential range forming. We don't know yet what kind of range it will be, but having an early range bias allows you to focus on the internal levels and trade them accordingly. On this chart, I'm also looking at the monthly averages for the high and low. We're coming very close to the average time windows ending. For the low, it's basically this week. That usually means either the low is already in, or it will form within this time window. If no new low is formed during this week, then I have to assume that the current low stands until proven otherwise. What does that mean? If price prints a new low or high outside the average time window, then the move can continue in that direction. But if a low or high forms right at the end of the time window, that can be used as additional confluence for a setup. For example, if we get a move down into key levels or even an SFP right into the time window, that's a valid setup. But what you don't want to see after that is price continuing to make new lows. That would invalidate the idea. So if price wants to make a new low this month, this is the week to do it. After that, we could see a rise to form the monthly high. Of course, the high could already be set. It happened in the first days of the month. That's not very common, especially with such a weak high for the month. But technically, it's possible. A rise from here would still be within the normal monthly time range, as long as price doesn't make a new low or high outside the average time window. For me, this still supports the idea of a potential range. Only if price breaks out of it would I move on to the next plan. Time-wise, I'm also watching the lunar timing, and we have the yearly Fibonacci time window starting in about 2 weeks and extending toward the end of March. In March, we also have the 202-day cycle window. So several time pivots are clustering together. If we range into that period, I would like to trade the range. Which brings us to the local levels. Locally, we have a few levels and some tricky long setups. The first long was, of course, from the low after what looked like a final washout candle, at least for now. We then saw a bounce, and that's where the idea of the range was born. At the same time, we had a short ladder position, And now the final target for the short has been hit. I still have a small runner, but the main target was reached. Then we had these scribbles. I was looking for a move up into the open range at that time, followed by a lower high or an SFP. If price then lost the Monday low again, that would open the door for lower prices. We got a retest of the open range, and since then, price has not been able to move back above the Monday low. With that, it reached the next levels of interest for me. I didn't trade anything in between. The first long from the low was actually a very good entry, but we had no real follow-through. Still, TP1 was hit, and with that, the trade was at break-even. Even if it had hit the stop loss, I wouldn't have lost anything except fees, which I don't include in the presentations. After TP1, price moved down again. I still had some limits on other exchanges. What I did then was close the first trade completely, secure the profits, and open a new one at the lows, updated in Telegram. It was only part of the planned size, which allows me to stay flexible and ladder into more entries if needed. For now, I'm in a trade and will look to add if price moves lower into the next level. If it starts to break down decisively, I will most likely cut it, but I'll update that in Telegram. It's a tricky long because we have several levels here, and price can just grind down and then suddenly reverse. So I'm willing to give it a few attempts on the long side. Best case, it hits TP1 again, and I protect the trade like the previous one. If it ends up being a losing trade, I'll simply look for a new setup at the lower part of the range. That's the plan for now. Based on today's averages, we can see that a new SFP is possible, just like yesterday. If that happens, it can be a reaction level. For now, I'm staying in this trade and will add the second limit if price moves lower. The invalidation is not exactly the same as on the chart, because my average entry would drop if I add lower. That gives me some room for an SFP of this low. But if price starts losing this level clearly, that would be a local sign of weakness, and I would aim for the next lower area for a trade, or wait for strength by reclaiming the level. This is basically the plan I've been repeating for a few days, and I just follow it and manage the trades. I update entries and take profits in Telegram when I take action, so you see not only drawings, but also executions. Many people forget that execution is part of trading. I see a lot of people focused on drawing levels, but you rarely see them actually executing trades. And that's not how you learn trading. You might become good at technical analysis, but trading also means executing and managing positions. On a chart, you can always show the perfect setup, fixed 2-hour targets, fixed 1-hour risk. But in reality, it rarely works like that. It was interesting to receive a few DMs asking why I manage trades this way, if I don't always go for the full 2-hour. If fixed 2-hour works for you, keep doing it. But I don't believe that rigid standards work in the real market. Most people who strictly preach standard rules are not profitable. That's the truth. You need to manage trades, manage emotions, follow your plan, and adjust that plan when new information appears. Smaller R trades taken consistently are often more profitable than waiting stubbornly for a perfect 2-hour target that never gets hit. If you're in a community where only drawings are shared and no real executions are shown, you won't learn the reality. And you'll often fail because some guru told you to follow a rigid standard. Manage your size and your risk, but remember, the standard approach most people follow is the one that leads to 95% of people losing money. Let that sink in. With that said, I hope this was informative. Wish you a nice day, and see you in the next one.